finance, a la shmup. What are moving averages? Ooh, I need another tissue. That average, I just can't get enough, so moving. Okay, yeah, that's not at all what this term is about. Here's a chart. Here's a set of trailing averages. 50-day, the blue line there, 100-day, the black line, and 200-day, the green line there. Note that we say trailing average. Why trailing? Well, people, we lost our crystal ball. Yeah, Warren, we know you took it. So averages for normal humans can only be trailing because trailing stock ticker closing prices give us data we can actually use. Stock averages don't take future data that we're merely guessing at, on their charts there. Only real numbers that we can actually point to. So here's the 50-day average for Coca-Cola stock, KO, in 2012. And if we move forward a year and change, well, here it's a 50-day average right there. Looks a little bit different. And, the 50 data input elements from its closing price each day vary. So the average of those data points will move. And why do moving averages matter? Well, for fundamental analyst kinds of investors, the people who care just about the cash flow and earnings and margins and revenue growth of companies, well, they really don't matter. But for Chartist types of investors, that is, those who focus really only about trading trends and shapes and curves and the metrics behind what patterns of stocks take in the future, well, they matter a lot then. In fact, the 200-day moving average is, generally a kind of Chartist living Bible for most Wall Street traders, and taking meaning from it is all about recognizing patterns and then imputing likely future patterns based off of those shapes. For example, if you're looking here at the peak of a Head and Shoulders chart, no, nothing to do with the shampoo, the trailing average of this, say, 50-day set here of data points is the line about here. But if you move forward and look at the back half, well, then the moving average is about here. And if you consider the entire chart, well, it's about here. And the lines are there in theory to give color as to what direction the market or this given stock is heading. And yep, sometimes it works and sometimes it doesn't.